Home values are high. You have a ton of equity. How do you tap into that money? How do you get the money out of your house? I'm gonna break that down in this video. So if you bought a home in the last, 2 to 5 years, your home value's gone up tremendously. You have a really low rate. You have a lot of equity. How do you tap into it? So you have 3 options to take money out of your house, and I'm gonna break that down in this video. You bought a house a couple years ago, 2 to 5 years ago, and home values went up. You have a ton of equity. How do you tap into that equity? There's 3 ways. Way number 1 is refinancing, cash out refinance. So you do a refinance. If you owed $400,000 and you want to take out $100,000, you get one new loan for $500,000. You pay off the old loan and you get $100,000 in your bank account. Sounds great, except you have a 3% rate now, and the new rate on the loan would be 6.5%, 7%. That is not smart to do. So I would highly recommend against doing a cash out refinance if you have a 3% rate. Just to give you an idea of how much it would cost you to do a cash out refinance, I'll give you this example. Let's say you owe the bank $400,000 right now and you have a rate of 3%. Your monthly payment is around $1,686. So your payment's about, let's just call it $1,700. If you took out $100,000 and you got one new loan of $500,000 at 7%, your payment would be $3,326. Your payment's almost doubling. Your payment is doubling to take out $100,000. So of course, doing a cash out refinance is out of the question. You do not want to do that whatsoever. So what's option number 2? The last 2 options is either a home equity loan or a home equity line of credit. So I'm going to break down both of those, the benefits of each, and you can decide for yourself which one is best for you. Let's start with a home equity loan. A home equity loan is a fixed loan. So you don't touch your first mortgage, that just stays there. Of course, you have to qualify, but a home equity loan is a fixed loan. Let's keep that same example. Let's say you want $100,000. You get a $100,000 home equity loan. It's a 20-year term, and you make the same monthly payment every single month. So the benefit of that is it's never gonna change, right? So what's the downside? You have to have an objective for that money right away. If you're taking out $100,000, you're gonna pay interest on that immediately. Like starting today, you take that loan, you have to pay interest on it. So if you have an urgent matter, whether it's some kind of emergency or you have a remodel that you've been dreaming of doing for a very, very long time and you're gonna get that money, you're gonna do the remodeling immediately, the home equity loan is a great way to go. It's a fixed rate, fixed payment, never gonna change, fixed amount, $100,000, that's what you get at closing. Again, wired straight to your bank account. So in that sense, it's a lot more safe. It's a lot more secure if you have an objective for that money right away. So let's say you don't have an objective for that money. A home equity line of credit might be a better choice. So how does a home equity line of credit work compared to the home equity loan? So the line of credit is exactly what it sounds like. It's a fixed amount, a line of credit that you can pull from at any time. Let's say, again, you get approved for a $100,000 line of credit. The bank usually makes you take out at least $25,000 at the beginning, but a little trick, you can wait 3 months and pay that $25,000 back and essentially keep that line of credit in case of an emergency. Or for example, I have some clients who want to buy a house in the future. They don't know when that's going to be, and they don't want to pay interest on a home equity loan, because once you take out that home equity loan in option number 2, you're starting to pay interest. So a home equity line of credit makes more sense because you get that $25,000, you pay it back. Essentially, you don't owe anything, so you're not paying any interest. It's just there when you need it. Now, the downside to the home equity line of credit, it's a completely adjustable loan, which means every single month, that interest rate can adjust. You may start at a 6%, next month it could be 7, in 3 months it could be 9. If rates come down, it could be lower. It changes every single month. So if you like stability and you're not really a risky person, this is not for you. Another downside to the home equity line of credit is, let's say you get the $100,000 line. Let's say you don't touch it. You have that $100,000 available. It's sitting there when you want to pull from it. The bank has the right to lower that amount or close that account completely at any time. If the bank senses that home values are going to come down and that home equity line of credit is now going to be a risky loan, they could cut it in half. They could say, well, as of today, your line amount, I know we approved 100, but now it's 50,000. Now it's 25,000. Or they could just completely close that line of credit. Now that's assuming you haven't pulled the money yet. Let's say you have a 100,000 line, you only pull 50. You pull 50, you have 50 available, and they close the account. you can no longer pull that other 50. So the home equity line of credit is probably better for someone who's looking to use that money as a safety net or do something in the future. They don't need the money right away. That's better in that situation. Whereas if you have, again, a reason for taking that money, you have an objective, go with the home equity loan. That's your 3 options: cash out refinance, home equity loan, home equity line of credit. Went over the benefits of each. Let me know what you guys think. Do you guys have any questions? Are you looking to pull out home equity loan or line of credit? I know a lot of people who are looking to pull right now because they want to buy other property, because they want to remodel their house. So if you live in California, you live in Arizona, and you're looking to get a line of credit or a home equity loan, all my information is below. You can always email me any questions that you have or leave a comment or schedule a call. Hope this was helpful. I'll talk to you soon.